Wild times. May you live in interesting times, right? So much to talk about. We want to ask you about Tezos and what's new with you guys, but have to start with the news in the industry. 2 weeks of madness after the FTX collapse. And obviously, this will come out in a few days, and there's still much more to come in terms of contagion and more news from other players. But just top level, what are your thoughts as you've watched the past 2 weeks of news in the industry and all around us?
Couldn't have happened to a nicer group of people. So I mean, really, this is a pretty epic bottoming out of an exchange that it turns out was built on like really faulty premises. For the last 2 years, it's been a little bit maddening because I suppose when Sam Bankman-Fried and FTX kind of came on the scene, there were sort of happy warriors, like they're making really aggressive plays to like scoop up companies that weren't getting like a lot of profitability, but were getting a lot of traction. And so I thought that was really, it's novel, it's aggressive. It made me think that maybe, I was doing something wrong, right? Because basically the Tezos Foundation and, the sort of Tezos ecosystem has been sort of reticent to do these sort of ham-fisted, heavy valuations, heavy pre-product, pre-revenue sort of venture deals. And so I felt like I was taking crazy pills because, this person had been anointed kind of, the new hot thing and raised $1.8 billion in funding in kind of a record speed. And then I guess like when I started to like kind of doubt that narrative was in May of this year when Luna fell, in effect because, that had been a Ponzi scheme, or at least openly a Ponzi scheme. And my husband and I had both called that out in some form or another in pretty public forums and had been castigated for it, frankly. And this was sort of a watershed moment for me to see like who kind of came to the rescue of that. And maybe unsurprisingly, like, sort of the FTX, like Hydra, started to get really heavy into deal making, into what I thought were like really fundamentally poorly built businesses. And it made me second guess like both the intention and the morality of them as a business operator. And it also kind of like gave me a sour taste in my mouth. So that's when I started to turn my tune. So it's been very shocking to see the way in which they have failed, or I guess gone down over the last 2 weeks. But it's also been, I think, a good moment to see that like the fundamentals of this business do have to rely on something other than like really aggressive deal making and sort of the centralized nonsense that we saw in traditional finance.
So I want to ask a follow-up to that. And you kind of called out two, I guess, very extreme kinds of deals they were making, both the very aggressive ones that they were doing that kind of seemed to give them an edge in the beginning. And then, towards the end, some of the ones that just perhaps seem ill-advised or not well thought out. Do you think there's space for, the really aggressive ones anymore? And what do you think we can learn about some of those ill-advised ones going forward?
Yeah, I think it's at different inflection points in their business cycle. So like they acquired Blockfolio, which I don't think is a bad company at all. In fact, I really quite like Edelman, who was one of the founders of it. And I used the app a bunch when it was like pre-FTX. And that had broad reach. I don't think it was ever going to be profitable, but it had broad reach. And so if you're trying to get on people's radar really quickly, just like business case study, like 101 type of thing, you want to pick something that has a broad distribution first and try to find inroads through that. I'm not sure if they ever effectively monetized any of this, but I do think it was a clever approach. Another thing that they did super early on was like they acquired companies that already had existing licenses in kind of difficult jurisdictions to find licenses, and so that was also clever if you think about again distribution. Bailing out BlockFi, seemed a little bit different, but it seems that they did that in their proprietary token that they own most of the reserve for, which should strike, someone with a degree from MIT as like not a great idea to basically put all your eggs in a basket that's like in a momentum-driven market, largely predicated on like people still going up, and then the second it goes down, your entire reserve being written off to zero almost instantaneously. Like that's not so clever.
It's funny, you harken back to Terra as sort of the moment, and maybe the bailouts were a warning signal. But in some ways, I've been saying too that even though it was two very different things, one was an algorithmic stablecoin, call it a Ponzi if you want. The other was a centralized exchange. The similarity is in both cases, one organization was saying, well, we're good because the value is pegged to this other thing, but the other thing we just made up. in UST's case, well, don't worry, it'll hold its peg because it's backed by Luna. Well, what happens when Luna collapses? And
Right.
same in a way with FTX and FTT. We've talked a little bit about the sort of warning signs with the company and the business side. What about like Sam and his persona? And specifically, I want to ask you about like DC, because you guys have been in this industry a long time, and I know you've put work in DC, so to speak. And Sam kind of very quickly, and I'm not even just talking about the donations. Everyone has made a big stink in the aftermath about the political donations, but specifically just his trips to DC, testifying, whining and dining congressional staffers. What did you make of all that during, and what can we take away from that? I mean, are we now back to like square zero in DC as an industry?
Yeah, I mean, so it's funny. I was just reminiscing. I've actually lived abroad for the better part of 5 years. So truly, I'm not really much of a DC insider. But I guess given that he was vaunted as this figure who was like a serious person, whereas everyone else in the industry is painted as some sort of whack job Looney Tune, it was kind of beneficial that there was at least one person who was seemingly credible in the eyes of people who do have the ears of lawmakers and people who incorporate policy. Yeah, a lot of that goodwill is gone now that basically it's proven to be shown that FTX was run more poorly than most of the other large exchanges, which are onshore in the U.S. Say which you can criticize Coinbase until you're blue in the face, but this type of stuff doesn't happen with a publicly traded company that's audited by credible third parties. It just doesn't dip into the piggy bank. That's been a version of fraud, basically since laws around financial firms have been enacted, which spans over 100 years. So it's like this is not even a novel. This is like the Whitman sampler of like dumb crap you shouldn't do in a business, like that are illegal and terrible. Like pick your flavor of deceit. And it's somewhat represented in this. So it's almost like flabbergasting the extent to which this delved into the different psychologies and the different like sort of orifices of the cryptocurrency space. But all it's to say, it is remarkable the credibility that Sam was able to get over the course of a very short period of time that Jesse Powell and Brian Armstrong have like struggled to maintain in the 9 years that they've run businesses that, for all accounts, whether you like them or not, have never really had the sort of spectacular failures that we've witnessed over the last 2 weeks.
I wanted to ask what you think the industry can or should do to try to get ahead of what's going to be this huge regulatory backlash. Like, so many people are, to use the analogy, basically calling for blood in DC right now. They're furious that this happened, especially that it's coming from someone, like you pointed out, was there spending time with them and testifying and helping educate people there. Is there anything that folks can do to try to kind of get ahead of what's going to come?
Yeah, I have no idea. I mean, honestly, I wouldn't even know where to begin with this. For me, I think that the initiative I've been most associated with was the Proof of Stake Alliance, or is the Proof of Stake Alliance, which is basically trying to force regulatory clarity through basically interactions with things like the Treasury Department, and kind of taking it from a principled approach. I don't even know where to begin with what sort of the Sam angle was for. I do know that the next person who testifies in front of Congress about this should probably wear a belt. But that's kind of the beginning and end of my advice. I'm not really an insider or anything like that. I just think this is it's such a shame because I've watched this industry, both as a participant and as kind of an interested outsider, for the better part of the last 10 years. And we could have never imagined some of the heights that it's hit in terms of getting on people's radar. I mean, the mere fact that China's banned Bitcoin is no better testament to Bitcoin's reason to exist than anything else. And the fact that they keep failing to do so is even more powerful, arguably. And yet, when it comes to Washington, when it comes to sort of political campaigning around this, there have been so many good inroads and so many clever people who've been really trying to make it work. And then for every one of them, you've got an SBF who just is the proverbial turd in the punch bowl. So it really stinks. So I can't really offer any constructive criticism other than choose your champions wisely. Although I will say this, like I do think a lot of this was made up by the mainstream media, mostly because Sam looks more like kind of a typical founder, a tech founder, than your more ideological folks who sit on the spectrum there. And I think this was as much about seeming patrician when other people paint crypto entrepreneurs as yahoos as anything else.
Yeah, I think that's a good take. One helpful way to kind of put a wrap on this news portion about FTX and then also transition what you guys do at Tezos, the crisis has been a chance for a few different groups to say, well, this is what we've always said, right? I mean, you mentioned, first of all, back when China banned Bitcoin, that being a positive proof of why Bitcoin is needed. This has been another case where, you look at FTT and all these other shitcoins, and the Bitcoin maxis have said, well, Bitcoin continues to work as it's supposed to. I first wrote about Bitcoin in 2011, and since then, the irony is with all the different things about Ethereum and proof of stake and different smart contract blockchains, Bitcoin hasn't really changed much, or at least the narrative around Bitcoin hasn't changed much, and that's what those people like. It's also been a chance for DeFi advocates to say, well, this is why you don't trust centralized exchanges, period. Even though I agree with you, Kathleen, about Coinbase. I think Coinbase gets to say, we're publicly traded, we're different, we don't do that with your funds. Still, the DeFi people say, don't put your money on any exchange. Use DeFi protocols, you can see what the coins are doing. The one problem with that moving forward is like, look, certain people, I used to say people of a certain age, but I shouldn't make it ageist. I mean, people of a certain tech savviness or lack of tech savviness, sorry, they're just not going to be able to use DeFi tools yet. The UX is just too high friction for them, sorry, this is not the end of centralized exchanges. But I guess I'd ask, where do you guys play into that? Is this a chance for you to sort of bang the DeFi gong again and say, well, we do DeFi governance, we're a smart contracts blockchain, and of course, something like FTX would be doing shady stuff behind the scenes?
Yeah, I mean, there are some, I guess, silver linings to this from the DeFi perspective. Like, I will say, in terms of help, like with creditors, for example, on Celsius, like they're kind of shit out of luck. Whereas if there's some sort of programmatic way to disperse with funds, there's no gaming that. I think Nick Szabo, of all people, actually made a really astute point, which is with smart contracts, you shift basically the risk from the front of the contract to the back of the contract. Like it's kind of, if possession is 9/10 of the law, you have to think about it as you're shifting the balance of power from sort of pre-litigation to post, right? If you've got a smart contract that's just it just does what it's supposed to do or what it's told, that the onus sort of shifts. Having been in litigation myself, I'll tell you that it's a lot easier to kind of deal with things after money's been dispersed than before, especially if you're having contests over a pot of money in some form. So it's definitely one of those things that can't be dismissed until you've lived through it. I'm sure the creditors in Celsius are kind of reeling that this wasn't programmed out, and that in fact now they have to have all of their positions exposed in litigation that's probably going to go for years on end. So all it's to say, yes, this could be a shining moment for DeFi. The fact of the matter is, there was a decentralized exchange a few months ago that was out of service because there was an AWS outage in Northern Virginia. So maybe this is the decentralization that we need, but it is the decentralization that we deserve. And there is a little bit of amateurism that's still rife in the space. Sam Bankman-Fried gave this really damning interview with Bloomberg that in retrospect should have been everyone's first hint that something was awry, where he talked about money boxes and yield farming. And it's funny because I've been calling yield farming Ouroboros finance for the better part of 2 years. It's the self-referential circle where there's tokens that exist to be traded for tokens that exist to be traded. And at the end of the day, DeFi is a portmanteau of decentralized finance. Finance is an activity for something into another. It's not just this recursive function where you have tokens that are traded for tokens that are traded. And if there is a wake-up call for this whole space, I hope it's that you can't just slap a token on something and make a sensible business model of it. That's in effect what FTX was shilling. And I don't think you get credit for basically giving alcohol to alcoholics and just preying on sort of volatility junkies at the end of the day, because that's basically how you build a house of cards, and that's most of what the DeFi space looks like. I will say that if you take it to its extent, you'll get actually good things, obviously redeeming things for folks who in earnest are pledging money to a protocol and making sure that they don't have to go through litigation for years and years to get what's due to them, putting the onus on the person operating the smart contract. Like that's actually, or who had created the smart contract, that's actually like innovative in a novel way.
How much further do you think DeFi needs to push or kind of evolve to become more decentralized? Because there are lots of people who say the extent to which DeFi and just the whole decentralized space in Web3 is really decentralized is a bit of a myth. Because it feels like for a while now, people have kind of slapped decentralized and Web3 on things in hopes to kind of signal to all the degens that this is safe. We're not centralized. But then, as you just said, AWS goes down and a bunch of stuff goes with it, even though it's decentralized.
Yeah, I mean, I think there's been a massive like decentralization theater going around, and no greater time do you figure this out than when things are not sexy, and decidedly they're not sexy now. Basically, we've had a lot of tourists in this space who've launched different tokens, and then they have these like really aggressive programs that give high yields for people to participate in these ecosystems, and at some point, to use I guess a Bankman-Friedism, the money box goes out because momentum stops building up. And so we're seeing that go down now, and the consequences of it are like pretty predictable from an economics perspective. It's funny, like I've been in a few of these interviews, and a lot of times people ask me the question, well, I don't associate Tezos with DeFi. I'm like, good. We a lot of the Tezos ecosystem is built on like doing things like security token offerings, which actually have some sort of underlying associated with them that like can't just be printed out of existence or just have like some sort of recursive money function applied to them. I'd rather work on like building ways to acknowledge and trade substantive assets than just sort of like playing around with like, if I can program a Ponzi scheme, can I like, set it off into the wild and see how it goes, which seems to be a lot of the thinking behind, uncollateralized stable coins. and unsurprisingly, that's why a lot of them are not doing so great.
So with that said about the different narratives in the space, is it a multi-chain future? And where does Tezos stand in regards to kind of, I guess, I don't know if you even think of them as competitors. I know that the early kind of take on Tezos was that, originally it might have even had the chance to come out in front of Ethereum. When did you guys launch? 2016? And then maybe kind of, for various reasons, Ethereum became the big number two focus.
Yeah, so Tezos, the prevailing network, was launched in 2018. But the project itself came to prominence in 2016 because of the DAO hack, which no one remembers because everyone has written in the last 2 years, not in the last 6. That puts you firmly in the OG category, Dan, sorry to say. But basically what happened was Ethereum, the DAO, yes. No greater sign that someone's like a true jerk than claiming a generic term for their project. But all that's to say, that was our first sign. The second sign was that these Muppets tried to basically like program a venture capital fund with like literally no thinking behind it, and took up, I think it was like 20-something% of the Ethereum's market cap in one smart contract that they clearly hadn't audited. And then when that was hacked, for $50 million, it like kind of cratered a lot of momentum in the Ethereum ecosystem. Anyway, that prompted a conversation of whatever happened to those Tezos guys after all, because there had been a white paper released in 2014, which kind of predicted a lot of the, melees that happened post-DAO hack, namely that of governance, like how do you fork and how do you decide who owns what in light of these types of disputes, which aren't purely technical, and yet they aren't, they're philosophical. How do you adjudicate that? So that was something that was predicted by the Tezos position paper. Another thing that was predicted was the importance of formal verification and the risk for reentrancy bugs, which is exactly what the DAO hack was a product of. And so all it's to say, it was a little bit of a Nostradamus moment. That got people chatting about Tezos, and so it prompted the team to try to launch a version of the blockchain, which they eventually did. And yeah, I would say basically since 2018, we've been through like 2 bear markets properly. I think a lot of the momentum was lost basically because of the fact that the narrative kind of got lost in the midst of like a lot of L1s launching, other layer one protocols launching, which were all very technically undifferentiated from one another. And so it became kind of trivial to launch a blockchain in some form, and yet what took hold was narrative. And because we don't have a sort of central figurehead who's like doling out a roadmap and tweeting about how it's going to be the best thing ever, blah, 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 we kind of, Tezos as an ecosystem sort of suffered from a narrative, I don't want to say it like a narrative violation, but a narrative, a narrative drift. And so I hope that I always think about decentralization as an insurance policy, and you don't think about insurance until you have some sort of catastrophe. And if I have some sort of silver lining for this whole disaster around FTX, it's like, listen, I mean, for the last 2 years, everything that I've been told from people who I trust in the ecosystem was like, oh, you've got to be more like, name your layer one that launched in 2019, 2020. And the similarity between them and the difference from us is it tends to be that they have a figurehead who will like go to you and like teach you how to use their app, and they will give you venture funding that has some sort of massive inflation that I don't think could ever be justified, bull market or bear market. And the difference between that and Tezos is like a lot of it's just decentralization and tooling that has been the focus for the ecosystem over the last 3 or 4 years. And my hope is that, as people kind of fall back to earth in the way that they have expectations about this technology, it becomes more about tinkering and more about hacking rather than who can get more venture funding into their ecosystem fund and who can kind of court very mediocre on average developers into like a cohort to say that they have X amount of developers. Like it's all been like superficial games that have been really easy to hack, down to like CoinMarketCap getting basically the thing to do over the last 2 years has been to issue a token, have like 99% in reserve and 1% float. And that's how you get, the implied like absurd, CoinMarketCap valuation. And that's so easy to game that people should be wise to it. But like you see every single time you see these bull markets, you see different games for people to hack to give the perception of momentum and adoption.
100%. I'm glad you mentioned the DAO hack, because of course there's still people who, and maybe they've just been drowned out by the noise, but there are people who think Ethereum failed way back then, by stepping in and saying, we'll reverse the chain and kind of undo the hack. When we talk about decentralization and trying to make sure that it's actual, decentralized governance, Stacey and I were recently at SmartCon, a Chainlink event, and I interviewed Kane Warwick from Synthetics, and our assigned topic for our panel was decentralized governance, and he said pretty bluntly he thinks it's actually gotten even worse in the last year, not better. And the point he was making was in a bull market, people stop trying to fix tools and they're not building; they're just going up, 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 up only. He had some pretty harsh words too for like DAOs that use snapshot, which is just kind of surface level, and that you could do even more true decentralized voting. But what do you make of that? Is that how you feel? And when we talk about governance, I mean, are people actually kind of working to make that happen?
I would say most projects that claim to have governance have like a very really mouthed version of it. Tezos has kind of the extreme, maybe to a fault, version of it, meaning things are only enforced by a vote on the chain. A lot of blockchains and DAOs are run as like suggestion boxes. And that's not such a bad thing in the sense that like, okay, a vote's a vote and it's a ratification. Like, there's nothing legal, like there's no code forcing the U.S. government to abide by these things. It's a law, right? And it's not as programmatic, but you obviously respect it because it's the law. So there's norms that people converge on, so on and so forth. But what's cool about doing this in a decentralized fashion with basically no point person just clicking yes and approving the vote, in effect, is that it's resilient to personalities. And that's ultimately like what the Tezos position paper talks about, is like, you don't want a gregarious developer to assume the role of like a Fed chairman. And in fact, like, then you're just trading one master for another, right? And arguably, you know less about programming than you do about like obviously like monetary policy, which has been around in some form or other far more than smart contracts. So I mean, my take on it is like a lot of this is decentralization theater, right? And that's where you see a lot of sort of DAO failures come in, is like all of a sudden it becomes like a school project. And when I was in middle school, I was always the person who wound up doing the work in the school project. So I'm very sensitive to this dynamic. And it sucks to be the person doing the work in the school project. No one likes being that person. I, for one, didn't. And that's the way I've seen most of these DAOs like fail, is like they basically act like a really crappy school project. But if you don't have any sort of way to algorithmically or programmatically enforce the decisions made by the group, you're going to wind up with just trading in one gregarious character for another, and that's just like not a way to govern anything. So what I like about Tezos is that in effect its governance model has a two-phase vote. I don't have any privileged position. My husband doesn't have any privileged position. The Tezos Foundation doesn't have any privileged position. It's really done by like traditional, appealing to folks who have a vested interest in the network, who own tokens, and kind of this very gradual process of experimentation. And a lot of what I see with DAOs is kind of like it falls to one party to sort of adjudicate over these things, and usually their judgment is flawed, and usually like when it comes to click the button yes, they get a little entitled, right? And that's the problem with ultimately just devolving into like one person's governance.
How do you fight against governance apathy? Because I have also seen that with some DAOs, and these are probably the ones that you would say, ones that aren't running themselves very well or kind of fail and just have gregarious people driving the ship. I've seen that, there's some things that pass with just not very many votes, but the timer's up and, it passes. So what do you think is the remedy to governance apathy?
Well, in the Tezos ecosystem, we've had kind of the opposite problem. So we have like basically a target for participation, so it doesn't pass, no ratification passes unless you hit a certain threshold. And what we found is like it's a target that moves up or down based on participation in the last cycle. And in the early days, we had an issue where we had a super majority, and we kind of like wanted to get people to stop participating as much so that we hit a reasonable target. Like, I think what happens is when you actually know that your vote counts, and that has to hit a certain threshold, that creates a natural cause for action around the protocol's upgrade. And we found that the more empowered people feel around that, the more they engage with the more they engage with the prompt. And we've even had one proposal fail. Not because of misinformation, but certainly because of like kind of a version of some person's account, and they thought one thing, and we would contest those facts, but like it wasn't a big deal that it didn't pass because a version of it passed the next time. Point being, like we actually had traditional politics at play, and it's kind of impressive that this person one party got like basically the ratification to fail because in effect, like, you have to actually convince quite a few people, and they're all distributed around the globe. Like, it's actually a pretty impressive political campaign. And again, not a big deal in the grand scheme of things, but it was a pretty impressive show of like independent thinking. Because, the Tezos Foundation had sponsored a number of different, programming entities that had, cited their favor in one form or another in this, and actually some random community member was like, no, actually, we don't think that makes sense, and, kind of forced clarity upon the situation by contesting it. So all it's to say, I think, like, because there actually is a consequence to your vote, and it's not just a suggestion box, people are automatically empowered. And then because you do a two-phase vote, meaning you basically vote to test and then you vote to ratify, with using a supermajority both times, like that, it is a tremendous amount of pressure for anything to happen. And I think it's that empowerment that really leads people to engage in the process. Because the reason I don't vote in general in the US is A, because of PJ O'Rourke, it just encourages the bastards, and B, like I'm registered in mostly states where like my vote doesn't count, like they're solidly blue or solidly red. Like I don't feel like I'm doing anything, and empirically I'm not. So I will say, like, it's kind of ironic that I co-founded this web-based project because my personal apathies seem to conflict with its entire MO.
Although, of course, if everyone said their vote doesn't count and didn't vote, then it would matter. That's always
yes, right. That is true.
That's how I used to feel.
So maybe that should be
living in Massachusetts. Right.
Yeah.
we always like to give guests a chance to talk up, whatever the most recent news is. So for you guys, there's the Lima upgrade, as I understand it. I don't know if you want to just tell everyone what that means for Tezos. I saw supposedly faster speed. And then second part of that, in terms of news we've covered, a month ago, Robinhood added the Tezos token. And I just wondered, especially there's been a lot of crypto controversy about Robinhood and Robinhood's place in the space, if people even view it as a crypto platform, but it obviously can be very influential what happens on there. What has that meant for you guys? Does it add any scrutiny? Just good thing to be able to get into the hands of more users?
Yeah, I mean, any sort of mainstream adoption is probably a good thing for the Tezos ecosystem. I think, to my point earlier, it's been about everyone else has built this sort of narrative of inevitability and have done this really aggressive sort of ham-fisted approach. And meanwhile, it's been very organic and kind of hunky-dory over on the Tezos side of things. So it's been more kumbaya than anything else, which is okay. But it's definitely set a tone that Robinhood is not known for. But I wasn't really a party to that. I think what I'm most excited about is over the next 12 months, we're going to we have reason to believe that we're going to hit 1 million transactions per second. That's been kind of a skunkworks project going on in the background with a few different groups of the ecosystem. What's interesting about 1 million transactions per second is, first and foremost, a lot more than Visa. And we've been working with different gaming companies who've used the Tezos blockchain in some form or another, and different stakeholders who have large fan bases or large groups of consumers. And the one question you have with oh, hey, would you do a more radical version of this experiment is yeah, but you guys can't handle our transactions per second. And so this is, I think, the missing link between mainstream adoption and sort of your wacky blockchain lab sitting in the back of a bank and making it kind of legit is unfortunately throughput. And it's kind of a lame problem to come upon after we've dabbled in so many different exotic things in this ecosystem, but I think it just comes down to capacity, and that's what's going to differentiate the Tezos blockchain from other ones, is that it's going to hit that 1 million transactions per second in a decentralized way first, meaning no reliance on multi-sigs, no reliance on proprietary software, truly decentralized, and having an architecture that rests on the participation of a community and not just a select group of people who can be hacked or whatever, as we've seen with all these different bridges that have gone down.
Yeah, we talked to someone from EY, I think he heads up blockchain for them, who said that he's seen a lot of these big mainstream players say that they're trying to kind of get their feet wet in Web3 and, working on blockchain, but it's always just kind of a side project. It's not replacing how they actually do business. It's not replacing all the other payment processors and, different vendors that they use. It's, we're going to give someone a, couple $100,000 and let them go play around with this thing.
Yeah, it doesn't. I mean, the problem is it's also been around for 7 years, and we haven't seen anything radical. So I can't blame people for being dismissive at this point of the technology. And then you kind of look at what's happened over the last 2 weeks, and it just looks foolish compared to compared to any other sort of centralized resource. So it's really it's always been a tough sell, and I think the last 2 weeks have made it that much harder.
So on things being that much harder now, I do want to ask about, I guess, how you think the industry stands with the SEC and Gary Gensler at the moment. I don't know. I mean, we made him our person of the year last year, but obviously not because he's a cheerleader for crypto. It's just because he has an enormous impact on, the industry. And I guess you could probably even disagree with that. But, where do you think things stand with Gary Gensler now? And is there anything in particular you're watching for coming from him and the SEC?
No, I mean, I think just as much as anyone else, people want to see clarity in the space, and that's kind of been the choir preaching from any entrepreneur in this space over the last 4 or 5 years. There's been a lot of legislation and different frameworks proposed, but nothing has been really adopted widespread. I think there's some interesting and novel approaches that could be taken by the U.S., but it's just been kind of a wait and see type of thing. So who knows? I think we're all kind of waiting to see what comes out of Washington. But there's been good proposals by Senator Lummis and some other folks, which I think made a lot of sense. But yeah, I don't know. Hard to say. But I don't know why picking on Gary Gensler over any other regulator would be sensible.
So one thing I want to make sure I ask you about is the efforts you guys have taken to get your name out there, like marketing wise. A lot of sports things, which of course is also interesting. We can come full circle here. When you talk about FTX, I mean, they had spent a lot of money in sports. Doesn't mean it's wrong to spend on sports marketing, obviously, but I know you guys you've got signage at the Mets games, which is really interesting to see. I didn't think I'd see a Tezos sign at Mets games. Talk to us a little bit about that. I mean, do you have data that shows whether that's been successful? I mean, how do you sort of assess whether that's worth the spend?
Yeah. So, I mean, to be candid, I don't work for the Tezos Foundation, nor have I ever. So their efforts at marketing through the years are a thing that I don't necessarily own. But I will say this: a lot of the deals that they brokered
consulted
were
and involved.
Nope. In fact, I'm a diehard
really?
fan, so you can imagine my discontent with this whole affair. But it's if you ever needed proof that I don't control a Tezos Foundation, look no further than the fact that I've been taunted nonstop by my mom's side of the family, who are diehard Mets fans, over the stadium signage that says Tezos. So it's been a real affront to my pride there. But odds to say, like, no, I'm not consulted. I think, basically what happened, if you look at kind of the arc of this, a lot of these deals were brokered in the middle of the pandemic, and came to the fore when it wasn't certain if there would be, for example, an F1 season in 2022. And if it wasn't sure if there would be baseball in 2022. So a lot of them, I think, were like really sensible ideas from like a business development perspective, and just in terms of dollars and cents. I don't have the KPIs for sort of impact, but I will say that obviously there's very high eyeballs on it, and at least for things like Manchester United, obviously that spurred a lot of like global presence that wouldn't otherwise be facilitated by some sort of ad buying campaign through any other means. So it is like a unique proposition, and a lot of it was brokered at a time when I think the rates were competitive.
That's interesting. And the second sort of form of maybe pop culture type stuff that I feel like Tezos has been associated with recently, NFTs, and specifically music NFTs. And I know that's, people can build on top of the blockchain, but I remember in Miami, maybe 2 years ago, I went to a One Of party, and One Of is doing music NFTs, and they're built on Tezos. They had Pitbull come out, and I just thought that was such a kind of funny crypto moment. He came out and grabbed the mic, and he was like, "We're so blessed to be in Miami. We're so blessed to have Tezos NFTs, One Of," and then he's like, "Good night, I'm out." And then he didn't even perform it. I was like, okay, that's very funny. But I just, the extent to which NFTs are either they had their moment and it's wrong of people to think that they're dead, or maybe for now they are dead because the bear market's so bullish. I mean, what do you make of how it seems to be some of these smart contract blockchains, NFTs have been the more prominent use case in the last maybe year or so?
Oh, yeah, absolutely. So Masari just had their Q3 report on the Tezos ecosystem out today, and it shows that like Tezos NFTs have been minted at a higher rate than ever before. So NFTs might be dead on other platforms, but they're certainly not on Tezos. I think that's because basically, for better or for worse, again, like going back to like the way that it grew, the ecosystem grew, it hasn't been through having like, VCs try to mark up some dopey like marketplace at a bajillion, dollar valuation, pre-revenue, pre-everything. It's really just been like artists come there and they kind of homestead, or whatever the digital form of homesteading is. They usually like participate in the ecosystems that they collect on. And I think that's a much more sustainable way to grow a community online than to just like try to will it into existence through sheer willpower and marking up dollars. So if I had to give an attribution to why the Tezos ecosystem has thrived in the NFT space over anything else, it's like by not trying too hard and basically courting people who have participated in a wholesome way when no one else was looking, and trying to basically elevate those people and not paying attention so much to folks who wanted like $20 million to integrate onto, some dopey platform that has yet to get any traction. So not playing stupid games. What is it? Play stupid games, win stupid prizes. Play stupid games, win nothing in the bear market downturn. So that's been like a big part of the story is like, if I see someone doing something cool or smart, I'll direct message them on Twitter and I'll basically say, like, how can I help you? That's how Misan Harriman wound up with the Tezos Foundation's, permanent collection. Was like, he was really clever. He was organically organizing different members of the community in a very sincere way. He's a activist and a photographer. And I just basically met him and I was like, listen, however I can help you, just let me know. And he came up with a very constructive proposal that didn't really cost a lot of money at all. And was meant to elevate unsung folks in the art ecosystem on Tezos. And I thought that was a really beautiful message, and it sent a really good signal. And so, that's one instance where I'm not a curator or anything like that, but I know sincerity when I see it, and I try to reward it by putting these people in touch with the right folks who can help them express themselves. And I think that goes a lot further than trying to throw insane valuations at a yet built site.
I wanted to ask about what it's like co-founding a blockchain with your husband, and I'll tell a really quick story. Today was one of the few days that my husband knew, just by hearing the name, the company that we were talking to for the podcast today, because we are a Man United household. And I'll get a bunch of shit if I don't say glory, glory, Man United on the podcast right now. So we're very much not, two peas in a pod as far as crypto goes. It kind of just intersects when he sees it in F1 or, English Premier League. So I'm curious to know, and I think it'd just be fun to hear about what it was like co-founding a blockchain, and having a marriage too.
Yeah. People always ask if me and Arthur met at work, and I always laugh because that's the last possible place we would have met. I think it's we're married in spite of this, not because of it. But it's definitely a lifestyle choice. I had some nice young woman a few months ago ask me how do you do work-life balance when you're, in a startup with your husband? And I'm like, oh, that went out the door a while ago. Don't go into this if you want work-life balance. No, but in sincerity, basically when you co-found something anything with someone, you need to have two elements: trust and communication. By being married, we already have that in spades. I find it really easy to communicate with Arthur. We joke that we have a shared brain. And it's not really a joke because we stumble upon the same esoteric comments and we laugh, and it's a little bit of a mind meld. And you have to be comfortable with that. So one of the reasons I'm comfortable with that is because I respect Arthur very much. And I if I have had one big silver lining over the last few years, it's that I get to learn more about someone I already really thought was super clever and fun to be around. So that's the romantic part. The fact of the matter is, when you're in it with someone, the highs are really high and the lows are really low. And there is a bit of toxicity into the fact that you can't really escape work. Arthur was on a podcast at this point several years ago, and someone asked him the exact same question, what's the good part about founding this with your spouse? And he answered at 4 a.m, I can wake up and tap Kathleen on the shoulder and tell her about my ideas. And I said, that's the best part for you? What's wrong with you? That's the worst part of it for me. So anyway, I think you get a lot of things for free when you go into something. Any big endeavor. It doesn't have to be a business. It can just be something as simple as starting a family. But it's anytime you are doing a big undertaking that requires a lot of responsibility, the things you need the most are trust and communication. And that's something that Arthur and I have in spades. We have a shared vision, which is obviously very helpful. When we disagree, we've learned healthy coping mechanisms to adjudicate who should do what. But overwhelmingly, we have our roles and we are extremely complementary. I know a number of people now, because other like married couples will reach out to us when they've co-founded something together, and where it tends to break down is when two people have exactly the same skill set, and they basically might have quibbling over things, and they don't necessarily delegate well because they're both trying to do the same thing at the same time. We've largely been able to sidestep that in just by having a natural segregation. Like my husband's an engineer's engineer, and you know he doesn't really try to like endeavor and step into my territory, and I didn't try to step into his. So I think there's a natural symbiosis, and on top of that, we've got a pretty strong marriage at the foundation of it, which is arguably like just as important.
Very important. That's great. Kathleen, let's wrap up this way. You know, before we started recording, the three of us were just chatting about the whole FTX crisis and just how many people in crypto very seriously are, you know, in a bad place because of all this, not just financially, but, you know, it's tough to see these meltdowns. What keeps you building? What would you leave the listeners with in terms of why they should hold on, believe that crypto as an industry is going to grow and continue to achieve things and actually be of value?
Yeah, I mean, I say this often, but repetition doesn't spoil the prayer. Basically, I think that cryptocurrency solves a problem that we've been trying to solve for hundreds of years, which is how to exchange value with someone you may not know without the risk of or use of an intermediary. I think that ultimately that lowers the ticket price on financial services, and that's something that's empowering for people, especially as we tilt into a world where, you know, a substantial fraction of the world is under authoritarian rule. It's never been more important than ever to have some sort of sovereignty. And I know that that's like kind of the wacky tinfoil hat way to frame it, but it's a very real problem for a lot of people, and this is a technology that uniquely solves that issue. Now, granted, you know, there's kind of the lighthearted, fun way that it's been solving it, mostly through, you know, photos of cats and kind of wonky experiments, but the underlying thing that we're trying to build towards is actually extraordinarily practical and extraordinarily empowering.